Good evening to everyone present here today. We have our product manager Jason D'Souza who will help you understand best practices, strategies and the right way to find the next best stock for your portfolio. Towards the end, we would also be having a Q&A session. Over to you, Jason.
A very warm welcome to each and everyone present here for today's event. We at MarketsMojo are striving to ensure that the best of retail research is available to all investors present here. If you kind of know that previously this kind of research, this extensive research was only made available to institutional clients or very big investors. But today we think that this research can easily be available to the retail investor group. But I feel somewhere some of the retail investors do lack three of the different things which I'll be covering in today's event. Okay. This is kind of like a new series, best stock selection. What I'll be doing is that anytime any particular stock is trending, or a lot of you all want to actually understand how to actually decrypt or go deep dive into that particular stock, we'll be doing a particular presentation on that particular webinar. Okay, so without any further delay, let me start off this disclaimer that investment in securities is subject to market risks. Past performance should not be considered as a guarantee for future returns. Now, as I said, three different parts, three different sections we'll be covering today. We'll be picking up one particular stock and analyzing it from scratch. We'll be going to the depth of it and doing some comparisons. The first part is we'll simply do an analysis, and this is my favorite way of doing it. We'll be checking some things which us investors don't actually check, but we'll be going deep dive and analyzing one particular stock. Now, after we analyze one particular stock, we'll have to understand whether it's the best stock from that particular sector. What most of us do is that we reach to one particular stock and then we label it as our favorite. But when you do an overall industry-wise analysis or you check its peer and close groups, you might actually find out a better stock in that same industry. So we won't just stop at analyzing one stock, we'll go a bit deeper and we'll look at all the stocks within the industry, whether this stock is actually good. Lastly, after doing all of this analysis, the stock should actually fit your profile. It should fit your portfolio well. Else you're just adding numbers into your portfolio and it won't take your overall investments to a better vision. So lastly, we'll also look at does the stock fit well in your portfolio. Okay, so three different things. Let's start off with the first one when it comes to analysis. But remember this particular point over here. And I'm showing you this slide so there's no double counting. The reason I'm asking you to remember that some factors like cash flow, consistency, shareholding, profits, name any of them, debt levels, valuation or technicals, all of this is actually covered by the Mojo score. It's all captured by the Mojo score. So you can't just look at the Mojo score and then start looking at a different indicator. All of that has already been captured, read by the system. We are analyzing this. The score runs very differently across different sectors. All of this is captured by the Mojo score. The purpose of this event is to help you dive deeper and understand if a particular stock suits your risk profile. Okay, so don't get much confused. The score is the final call on the stock, but I'll not be only looking at the score today. What I'm trying to do is I'm trying to touch other different factors, which will help you kind of understand whether the stock suits your risk profile and if it's the best in the industry. So starting off with the first one, analyze one stock today. The first particular point we need to start off when we analyze one stock is stress a bit on consistency. We at MarketsMojo do look at consistency as an important factor and it provides some clarity on entry. The reason I wrote this line after the first point is that you might find a particular stock which looks extremely good today. At the current market phase, this particular stock which you've stumbled upon is actually the best possible stock you could actually invest in. But it might still not provide you the returns as per your expectations. You should actually ensure that the stock you're investing in is performing well in returns or earnings across different periods. Okay, when you find a stock which is consistent, you might be a bit more comfortable when it comes to investing because your entry timing is actually ignored over here. You might enter the stock, it might go down, but since it's consistently performing in its nature, someday or the other, it will slowly start giving you the gains you're expecting to see. Now, the second part is what is MarketsMojo's call. I won't spend much time on this. I keep coming in front of you all and talk about the four different laws. We'll be quickly running through this. And the third part is what's the market's mood for that particular stock. This is something I've not touched before. The market's mood. How is the market treating that particular stock? Okay, so three different things. Let's start off. Consistency is the key. How has the company performed well across the tide? Has it performed well? This is more of the earnings of the company. We have our CFT score along with the price movement. Okay, and this is also available on the site. To make it easier for you all, I'll also switch from the PPT back to the site to kind of explain you where I get these particular screenshots or where I get this particular analysis. Okay, consistency is the key. We are looking at the earnings of APL Apollo Tubes. This is the stock I'll be reviewing today. Okay, and the reason I've taken this is that it's currently a top mojo stock in our list, but it'll also be easier for you all to understand how we analyze a particular stock. Now, if you see from the past 4-year period over here below, so let's say 16 different quarters, there has been 1, 2 or 3 quarters where the company has seen a negative financial performance. Well, rest of the other quarters, you can see these green bars over here, they're nothing but quarterly performances. It's been always positive. Sometimes flat, but still positive in nature. The earnings looks consistent over a period of time. Okay, and if you see the price also moved very handsomely along with the earnings growth. Okay, so with the earnings, if you see, there is some kind of consistency. But even if the company is doing well with its profit and sales, is the company actually giving good returns back to its investors? That's what something we're going to look at today. The first part is just earnings. Is the company doing well with its earnings, sales, profit? That's good. But is the company actually rewarding the investors back for investing in that company? Here you need to look at the return quartiles. I have covered this slightly in some of my previous events, but I'll explain you the importance of looking at return quartiles. Let me take you to the return section over here to show you where I get the return quartiles from. Okay, so now if you zoom into my particular screen, okay, so this is the return quartile section. We divided upon closest peers by the industry and market cap. Quartile is nothing but we bucket companies into quarters, so 4 different parts. And we rank the first quartile as the best performing companies in terms of return, second as the second best, third, and the fourth quartile, which is a bit dangerous, which is the last quartile. But if you see return quartiles by industry, we look at the entire iron and steel industry and we see whether this particular company is either in the first and second quartile. Okay, so if you click this particular button over here, you can see first quartile, these are the stocks which have performed well. Okay, you can also see the second quartile, third quartile, fourth quartile accordingly. So second quartile, you can see the stocks which are falling in the second quartile. So you have JTL Industries, High Tech Pipes, so on and so forth. Now this is important because if you see 1 and 2 year consistently, you will have a better clarity that this stock is among the top performers consistently. So quarter to date period, September to December, June to September. Okay, if you scroll below, you have 1 year, 2022 year, 2021. And the reason we have different periods over here, different horizons, is so that the company is doing well in each of these different periods. If you just see a few green and a few red, it might be a bit disturbing. Okay, if you see across market cap, it's done. It's a good performer as well. Okay, in the large cap segment, it's done well. So one is the earnings, which is the first chart, and second is the actual return coming back to the investors. Has it done well in both these segments? This is something you need to check. So that whenever you enter, you don't have to worry. The company should most probably do well when it comes to its results and also return that wealth back to its investors in terms of capital appreciation with returns. The next part is what is MarketsMojo's call. And as I promised you, I won't spend much time over here. I think most of you will actually understand this very well. The quality or the gatekeeper, you look at the long-term financial performance, this particular stock is excellent. And you'll be shocked to know that I think in the iron and steel industry, in the large cap segment, we only have one excellent stock, which is APL Apollo Tubes. The stock's valuation today is expensive. Now, some of you all might be a bit uncomfortable when it comes to expensive stocks, but you have to understand the growth with this particular stock. It's growing at a very rapid pace. So when at this expensive valuation, it's still commanding its premium. It's still good to invest in. The recent quarterly performance was positive with a financial trend which is ticking upwards. Now what I mean by that is that from the previous financial trend, which was 7, it has gone upwards to 13. So the December quarter was at 13 over here. Okay, and lastly, the technical strength of the stock, if you see, it's turned bullish from mildly bullish on 2nd Feb. So currently it's around 23rd Feb here. 20 days back itself, the technical strength of the stock had turned bullish from mildly bullish, which is another positive factor for this particular stock. The final score of the stock, what is MarketsMojo's call? It's an 80 at a strong buy. Okay, so this is the last part of the particular score meter. It's an 80 at a strong buy. So MarketsMojo is giving a thumbs up for this particular stock. But what's the market's mood? Now this is something different. The stock might be good. We might be asking you to buy that particular stock. All our indicators are showing positive. But is the market actually having a good, a good perception about this particular stock? Is the market also supporting it when it comes to buying? This particular chart over here is much more important than you can actually see these 7 different indicators. The reason for that is that I look at this particular chart to understand what's the movement of this stock in the market. It's a simple technical indicator chart, but what I want to explain over here is something different. If you look at the weekly and the monthly ranges, sometimes you might find some stocks which are, let's say, bullish over here in the weekly range, but bearish in the monthly range. And this could be possible if over the longer period the stock was seeing a bearish trend, but in the weekly period it starts seeing a bullish trend and moving upwards. Okay? In the other ways you can find, you might find the opposite way as well. Okay? You might find the weekly bearish and the monthly bullish. So the company might have been going up, but since the weekly is bearish, in the near term it's showing a negative trend. For this stock, luckily, both the indicators, weekly or monthly, across these 7 different technical indicators are bullish, except KST no show thing is mildly bearish in the monthly range. Okay, few of the indicators are showing no signal, but over and above, it's currently running in a bullish range. Okay, that's fine, that's available on the site, but what about the volume support? Okay, most of you all must have not seen this particular card on the website, so I'll simply dive into the website. Okay, if you look at the volumes over here, the 1 month delivery volume has increased by 22%. Okay, so 22% increase in the delivery volumes. Okay, here you can also dive in deeper and get the full details of the day-on-day volume of BSE, NSE, so on and so forth. But we'll not dive over there. The learning I want you all to take away from the markets mood is that the delivery volume has increased. And if you see the returns of the past 1 month as well, okay, it's 8%. Now, the stock is going up and the volumes are supporting it. There is one particular conclusion you can come here. With increased volumes and an upward price movement, it's signaling a strong buying support. If the stock was going down and the volumes were up, then it would have been a strong selling support. It's going more downwards. But here the stock is going up and the volumes are increasing. You can see the market's mood right now. The market is collectively trying to drive the stock's price up. Apart from what MarketsMojo says, apart from your personal analysis, this is something that gets you back on ground reality. If you don't start seeing, what exactly the market is also doing with this particular stock, as I said in the beginning of this webinar, you might stumble upon the best stock. But if you don't understand its price movement, see the volume, see the strength, okay, see the entire market's mood, that stock won't give you any particular returns. Okay. Moving on, shareholding summary. Okay, market's mood, what I meant by that is that are investors actually purchasing this particular stock? Okay, the prices are going up. Who exactly is buying this stock? Who exactly is showing interest into this particular stock? And I don't know if many of you all know, when it comes to the shareholding pattern of any particular company, it's actually broken down into promoters, the people who start the company, FIIs, we speak a lot about FIIs, DIIs, okay? And then we look at some non-institutional investors also, like retail investors like us. Now, there is a saying that if FIs see growth in the shareholding of that company, or even mutual funds are increasing their holdings in the company, such companies tend to outperform. And the reason for that, across many of the books I've read, is that when big institutions invest in a particular company or show increased in their exposure in that particular company, the management gets a bit strong with what they are reporting. They get a bit aware that there are big institutions investing in this particular company, and the company starts running on its foot. Okay, FI holding and mutual fund holding increase is a positive factor when it comes to any company's shareholding pattern. Okay, and what I've done is that I've broken down the actual composition of APL Apollo Tubes shareholding. Okay, and if you see here, I'm actually adding the FI, mutual fund, insurance, other domestic institutional investors, and I'm excluding the non-institutional investors and promoters. I'm just looking at the institutional presence of this particular company. Since it's in the iron and steel industry, I also compared other companies in the iron and steel, and I've realized that APL Apollo Tubes has the third highest institutional holding. First is Tata Steel, followed by JSW Steel. Okay, so when all the foreigners, the foreign institutional investors, the big mutual fund schemes over here in India try to invest in a particular company, okay, they do a lot of ground research as well. And they do a lot of extensive research. They actually go out, speak to the company shareholders, so on and so forth. Now, when they are increasing the exposure to the company, they are a bit more confident as well. And companies which have high institutional holding, okay, that is a big green signal, and your APL Apollo Tubes is the third highest. So we've seen price movement. We've seen the company giving good returns. We've seen volume support. And today we're also seeing a strong shareholding pattern of that particular company. Now, what exactly this signifies, if I sum up the first slide, consistency is the key. We've seen consistent earning and return performance. MarketsMojo's call is a green signal with an 80 strong buy. And the market's mood is also good with strong technical or price strength and strong shareholding strength. That means people are actually driving the price up, and the quality of shareholding in that company is also increasing with more FIs and mutual funds or domestic institutional investors adding exposure to that particular company. So when I analyze this particular stock, just this particular stock, I'm not looking at its peers, industry, none of it currently. But if I analyze just this one particular stock, I'm getting a green signal across all of it. Now you might rush and start buying this particular company, but I would suggest you that this part 2 and 3 of this webinar is also very important. You can't stop here. MarketsMojo has given a buy call. Market's mood is good, consistency the key, all of it is showing a green signal. But now let's step back and open up. Let's look at other companies in the industry. Are they actually better than APL Apollo Tubes, or have we found the best pick? Find out if there are better alternatives. We look at the earnings performance versus the sector. Okay, we look at how APL has done, how has the sector done as a whole. Is it a strong play in the competition? Now, I don't cover this up much, but today we'll dive deep in whether it's a strong play in the competition. We don't look much at this. And the third is the return performance versus the sector. This is straightforward. Let's start off the earnings performance versus the sector. If you see out of the total 105 stocks in the iron and steel sector, only 40% of stocks, 40 stocks or 38% have seen positive results. Okay, 35 have seen flat and 30 have seen negative. So only, let's say, a bit more than 1/3 of stocks have actually seen positive performance in this particular industry, iron and steel. Okay, how do I get this particular slide? It's very simple. Go to research, move to result corner, which is the last option. And here, if you see, the December results have been declared for many of the companies. Okay, so here you can simply select iron and steel, which is APL Apollo Tubes industry. And here you get the breakdown. So 40 stocks positive, 35 stocks flat, so on and so forth. So over and above, the trend hasn't been very good when it comes to the earnings of the iron and steel industry. Okay, but right now I'm seeing a very broad factor. I'm looking at all 105 stocks. Let's dive deeper and segment even further. Let's look at APL Apollo Tubes' closest peers in the industry. How have they performed? So what have I done is that I've looked at sector iron and steel and market cap, the large cap segment. Because APL Apollo Tubes is in the iron and steel industry, but let's go a bit deeper and only look at the large cap stocks. It's the only large cap stock to report a positive earnings in the December 22 quarter, and it's risen 7.6% more than its peers following the results. Now, what I mean by this is that if I add a market cap segmentation of large cap, now you see only one stock from these big iron and steel players, only one stock is positive. Okay, rest all 4 are negative. So APL Apollo Tubes is the lone survivor in the industry. And the best part about that is, since its results on 2nd Feb, it's the only company which has moved up. You can see the return since results. Okay, these 4 companies have not moved up much, but only APL Apollo Tubes, because of its positive result performance, improving it from the previous score. Since 2nd Feb, it's moved up by 6.58%. The rest of the stocks have seen some correction. Only this stock is flat. So if you see this particular screen over here, okay, this is the lone survivor in that particular industry. Now moving on to the next one is what's the competition. We've seen good performance of APL Apollo Tubes within the sector in terms of earnings. But let's look at what's the competition over here. What's the exact market share of APL Apollo Tubes? Okay, so around 107 peers identified across the industry, and we have 8 close peers like Steel Authority of India, Tata Steel, and some of the big companies which are its closest peers. But what I found out that this particular company is the 5th biggest in terms of market cap, 8th biggest in terms of sales. Okay, trailing TTM, which is trailing 12 months, the last 4 different quarters, and 13th biggest in terms of profit. The sad part is that this number is actually going downwards. Let's try to understand this particular thing over here. If the company is 8th biggest in terms of sales, it should ideally be 8th biggest in terms of profits also. Why is it 13th biggest in terms of profits? Is it losing its profit share with some other players in the industry which is a bit more, has better operating efficiency? If you understand basic accounts, we have sales. This is very basic breakup, okay? It's not an actual accounting breakup, but we have sales, we minus the expense, and then we have the profits. In terms of sales, it's the 5th biggest company. There is some problem here with the operating efficiency that it's the 8th biggest company, in terms of sales. But there is some issue here with the expenditure that it's becoming the 13th biggest in terms of profits. If this number was, let's say, 4th, okay, then you might say that the company is getting lower sales but higher profits. But this is something which is a problem for the company. If you're 8th biggest in terms of sales, you should at least be 8th or slightly, 7th, 6th, 5th, or most likely the 1st biggest in terms of profits. So here, in terms of dominance, even though the company has got a good market share, the profits are not turning out to be the best in the industry. And here is where the company lags at one point. You saw the first particular slide we saw, everything was perfect with the company. Then why is the company not actually having a higher profit share? How did I get this data? It's really simple. I think some of you might be a bit confused here. You go to the screener section over here. Okay, and we'll simply clear all filters over here. And now since we're talking about the iron and steel industry, I'll select industry. And I'll select iron and steel. And we're talking about market share. You can simply go to size, click market cap, sales, and profit. Okay, you can run. Now, if you sort it in descending order, you'll see the biggest company, which is Tata Steel, which has the highest sales. JSW Steel, SAIL, okay, and you'll find in the 8th position APL Apollo Tubes. But the profit is quite at 603. Okay, so now look at these two companies. Even this company has got some 16,000 crore in sales. Even this company has got some 16,000 crore in sales. But this company has a higher profit share. That means the sales minus the expenditure of the company where the company is doing well is turning out to be high in terms of profits. APL Apollo Tubes is not doing a good job in that particular part. Okay, so hence this looks like some problem for the company. Okay, but moving on, this particular screenshot is much more helpful. I don't know if you'll actually speak about comparing the stock across its peers. Someone yesterday also asked. You can click on compare and you can look at all steel stocks, iron and steel stocks, and the 3 dots here itself. So quality of the stock, as I said, it's the only excellent company. Okay, lest we have good, average. If you click on full details, we can go a bit more in depth. Okay, there's one excellent company. There should be another excellent company. Yeah, Sham Metallics as well. But if you see in the actual segment of large cap stock, there's one excellent company over here. Okay, it is expensive, as I said in the starting. It has a positive financial trend. If you can see here, 13. The rest all stocks are showing a negative. Okay, we have one very positive over here, but these 3 are also negative. This is not negative. Bullish technical trend, which is very important. Okay, so even comparing with its peers with the Mojo dots, this company is still at a further foot. It's showing a strong strength over here when it comes to the 4 different dots. Okay, with its closest peers. Now the next part is how has the sector performed. Okay, I'm looking at the price movement now over here. Okay, in the previous of the slides, if you see over here, we looked at the competition, how big the company is in terms of the competition across the sector. Let's move on to how the iron and steel industry has performed as a whole. In terms of return, the 1-year performance of Nifty index has been flat. This is very simple. This is a screenshot from the markets page. If you see, 1 year, the Nifty metal industry has been flat, which is 0.14%. But this particular stock has moved up by 56%. Okay. So this particular stock over here has moved up around 56%. And the highest loser is Nalco over here, it's 30% down. The industry has been flat. You can see 7 stocks have gone up in the last 1 year period. 8 stocks have gone down. But this stock has outperformed all of it. Okay, now let's look at the year-to-date period as well. The really short period, the last 2 months. This company is actually moving against the tide. Mr. Sunil recently came out with his presentation on Monday and we spoke about the Nifty Metal Index, how it's actually going downwards. The index has gone down by 16%. It's one of the worst performing indices. I think the worst performing indices this year. The index has gone down by 16%. This stock has actually gone up by 16%. You can see the amount, imagine the amount of alpha in the price movement of this stock. Okay, stock has gone down by, the index has gone down by 16%. This stock has gone up by 16%. A 32% alpha with this particular stock. Moving against the tide. Okay, so even though the sector is not performing well, my point here is that at times the overall sector may perform poorly, stocks within the sector may outperform. This stock was recommended 2 months ago as a Mojo stock, it's up by 11%, but Sensex or the metal index has been hammered since then. Okay, when you reach to a particular stock, understand if it's the lone survivor in the industry, it's fine. The industry might be going to a downward trend, but if it's the lone survivor in the industry, you can still add money in that particular stock. Okay, now let's sum up the second part. We looked at the first part where we only stared at the stock with one lens. Now we opened up 2 lenses and we looked at other stocks within the industry as well. Now if you look at the earnings performance for the sector, it's the only positive performer in the group. Okay, is it a strong player in the competition? It's not a market leader. And it has a lower profit share compared to sales. Okay, this is one negative for the particular company which we found out. And return performance, it's an outperform the near period or also in the 1 year period. So in the second segment of this particular presentation, there's one negative point. Rest 2 are positive. Okay, so now let's move to the third particular segment is that does this stock fit well in your portfolio? What I see is that a lot of investors rush to the Mojo stock section and buy a particular stock without understanding how volatile it could be for you. When it comes to selecting the best stock, analyzing it within the industry, all that is fine. But before you invest in it, take a step back and actually look at these 2 different slides over here. How much you should buy is very straightforward. I keep talking about the 30-10 rule. And can you stomach the volatility? This is something new. The second part is where I'll be stressing and spending some time on. And I want you all to take some learning from the second point over here. The first point is a bit straightforward. I keep coming here in front and I tell you all that any stock you invest in, it should be less than 10%. Any sector you invest in, it should be less than 30%. As simple as that, the 10-30 rule. Okay? I'll not spend much time over here. Most of you are actually by-hearted it. But can you stomach the volatility? What's the risk of investing in APL Apollo tubes? Okay, I wanted to understand what's the risk when it comes for this particular stock. Is this stock for you over here? It says high risk and high return. But what exactly is this high risk and high return? How do we derive it? And when you reach to any particular stock, how you can understand whether if this stock is too risky for you, is it worth the return? Now we do a very simple calculation over here. This absolute is nothing but the return of the past 1 year, 55%, and Sensex return is 4.32%. And standard deviation of how fast the stock is moving away from its mean, how much the stock is moving away from its mean is the volatility, how much is the movement. So if I had to define Sensex movement like this, okay, at 16%, okay, APL Apollo tubes is 40%, so the movement could be like this. Very volatile. Okay, but that's my basic explanation of this particular thing, which is 40%. It's very volatile from the mean, okay, very volatile from the benchmark. So your risk adjusted return, this thing over here, this thing in the between, which many investors don't understand, is basically an equation of the return, the absolute returns, divided by the volatility of the stock. A bit confusing. How much you get from the stock versus how much risk you take. The higher, the better. If you see, this company has volatility of 40%, but the returns is compensating on it and it's giving a 1.38 risk adjusted returns. Very simple. How much returns I get divided by how much risk I am taking when I invest in that stock. If you see Sensex, you're getting 4% returns and higher volatility at 16%. So your risk adjusted is less than 1. Okay, you're investing in Sensex, but you're paying lesser, you're getting lesser returns for the amount of risk you're seeing. And okay, last year was very volatile, so this number is at 16. But APL Apollo tubes is much better over here. Even though you're taking 40% volatility, the returns are better. But you have to understand high return with high risk. Try to find out stocks with high return and medium risk or low risk. High return and low risk is the best stock you can invest in. Most of us know that. Okay, so if you want to add this stock in your portfolio, you shouldn't be worried if this stock corrects and then starts going up or corrects and then goes up again. You have to be okay with it. Another thing which I kind of try to look at is we don't have a maximum drawdown over here. That means how much the stock can fall from its maximum point. So any particular stock goes down by around 10 or 5-10%, I see investors getting worried there also. We get a lot of feedback saying, you know what, we invest in the stock is down by 10%, now what? If you can't actually stomach 10% drop down in a particular stock, then the equity market itself might not be for you. Okay, but to understand how much it has corrected from its high, this is a very nice slide over here. This is also available on the website. The 52-week high over here and the current range of the stock over here. So it has corrected by this much percent over here. This much. This is the 52-week low. Okay, but now if you see a stock, let's say for example Adani, and if you see the difference over here between the 52-week high and low, for example. Okay, this is the 52-week high, 4189. The stock is over here at 1383. You should also look at this parameter before investing in a stock. Okay, the stock might be extremely good. If the needle is somewhere here or less below yellow, then you have to understand that the stock can fall that much. It has fallen that much before. Okay, so whenever you search any particular stock to invest in, okay, if you should also look at the high, how much it has fallen from, to understand what could be the drawdown in the last 1 year period. Okay, look at Infosys over here. We talk about Infosys being a safe bet, but the stock's 52-week high is 1924. Here it's at 1551 today. Okay, and if you look at the dashboard, you can understand what's the risk versus return. You look at the return summary over here. Sorry, this one is Infosys for you. Okay, so medium risk, low return. So this is kind of like a hedge in your portfolio. Summing up the third and the final segment, how much you should buy the 30-10 rule. Let's not go much more in deep with that. And can you stomach the volatility? This stock is for high risk investors only. If you can't see that amount of volatility in your portfolio, don't go ahead with APL Apollo tubes. Find a safer bet. But don't invest in the market with some, you're getting so scared that you're buying a particular stock and you're so worried about it if it falls by 5 or 10%. Let's say even 20%. Can you stomach that volatility? If yes, then you should go with this particular stock. Not that it's large cap, so it's going to be risk free. The risk will be inherent, but you have to understand, you have to break down that risk with that risk adjusted returns slide I showed you. This is the final report card. If I had to sum up everything of that particular stock, you see it has been consistent. Just a second. Yeah, it has been consistent over here. MarketsMojo's call is good. The market's mood is good. The earnings performance versus the sector was good, but it's not a strong player in the competition. So this is one thing where I can't give a full tick mark. So usually when I find stocks with a tick mark here or tick mark here and suits my risk profile is when I kind of like to invest in that particular stock. So there is one particular negative factor, but that's fine. It might not be a market leader, might become one soon looking at its profit and sales growth. Okay. Return performance is good, high risk, high return potential. Let's take for an example, we are talking about Ambuja Cements. Now if you see this stock has been inconsistent across periods. MarketsMojo's call is also low. If you look at the market mood for Ambuja Cements, it has weak technical signals, but the shareholding strength is kind of good for this company. Are there better alternatives? It has been a negative performer in the peer group. But see, if you see this particular company had a cross mark over here, this particular company has a tick mark. It's top 3 in the industry in terms of sales. Okay, so here it has a very strong dominance. Return performance is still bad. And it's a high risk, medium return. So you're paying more for your risk and you're still getting lesser return, which is medium return. Okay, so this stock would be a no-no if I would go and invest today. I've left this blank. I've left this blank purposely. What I'll be doing is in the Q&A session, which is going to follow, okay, I will be taking a particular stock and I'll be filling the particular columns over here. Okay, so Mehta, when we have our Q&A session open, you can simply ask me if any particular investor or many investors want us to analyze one particular stock. We'll redo this entire thing and I'll be filling this particular slide over here so that we can reach to a final call. I must have covered a lot of different factors today, but if we do this practice sheet, we complete this particular report on any stock. Okay, any stock we get in the Q&A session, we'll be picking it up and we'll be studying in depth over here. Okay, before I end the presentation, we do have an offer of 26 step line for 2 years plus 3 months. Okay, since you're attending this webinar, you're getting 3 months free. I'll ask Mehta to drop the link in the chat box. And with that, we can open the floor for the Q&A session. Over to you, Mehta.
The first question is from Mr. Ranjan. I need help with stock selection. I wish to invest in only 5 stocks. I'd like to gain steady returns for 10 years just through their investments to build income.
So you wish to invest in only 5 stocks. Let me tell you, it's a very risky strategy. What we suggest is at least 10 stocks or more. Even 10 stocks is a very risky strategy. If you're looking to gain steady returns for 10 years, okay, just to their investment to build income, the approach you're following is very risky. So if I was investing in only 5 stocks, I would look at getting at least 2x or 3x of the index. If you're looking at getting steady returns for the next 10 years, why don't you increase the number of stocks you're investing in? The amount of risk you're taking would be lesser. You're looking for steady returns, right? You're not looking for some 2x, 3x multi-bagger picks. So increase the number of stocks you're looking at. With 5 stocks, your portfolio might move in any direction and it will be very risky. See, steady returns or something. So something interesting which I'm going to speak about, which is on Saturday, is a growth versus value strategy. Which one works at what period? I would suggest you come for that particular event. I'll be actually showing you how you can look at stocks which are steady in nature or stocks which are growth and grow very fast. But if you want me to answer this particular question over here, increase the number of stocks you're looking at investing in. If you're looking at getting steady returns somewhere in line with the index, then you select stocks which moves along with Sensex. Go to that particular section I showed you whether if the stock is for you. Look at stocks with low risk and let's say medium or high return, and look at stocks which move along with Sensex and Nifty so that you're getting a steady return along with the particular index.
The next question is from Mr. Mohit Arora. How to shortlist top stocks?
Shortlist top stocks, so there are many ways to do that. We have the Mojo stock section where we ourselves shortlist stocks and provide them to you. The best way I like to shortlist top stocks is via the screener. So if you just share my particular screen. Okay, if you share my particular screen over here, so you go to research and you go to make your own screener. Yeah. So there are different ideas you can go with shortlisting top stocks. There are some with the industry, some with the particular market cap. If you want to find out how MarketsMojo has rated the top stock, you can simply go with the green dot. The green dots, you can simply select all the 4 different dots and select green dots over here. Or else you can jump onto investment ideas and top stocks, the 3 green dots, let's say across all market caps. Okay, if you select 3 green dots across all market caps, here you can actually see across different small, micro, mid and large cap stocks, what are the top stocks you can actually invest in. Okay, understand that every company you actually look at, you have to look at the final score as well to get a wholesome view on that particular stock. So Andhra paper looks like a top stock here. Mojo stocks in 9 months, 7 days, 85 strong buy is Andhra paper for you. High risk, high return. Okay, very good return the past 1 year, 100%, but that much volatility as well. Okay. Then you can move on to any of these over here. Now, this is only available to our professional members, not open to all investors. Okay. So these are some of the ways you can go for top stocks.
The next question is from Miss Isha. How to select multi-bagger, small and mid-cap stocks? Please answer.
Very simple. The exact screen I showed you a while ago, if you come over here. Now, small and mid-cap. So we have 3 green dots with mid-cap, 3 green dots with small cap. And the thing with a multi-bagger approach is also constant monitoring. Now, what I mean by that is that let's take, for example, QnA Axles. Can this stock be a multi-bagger? Multi-bagger nothing but a 2x, 3x return potential. If you go to price over here, actually, let's go to financial trend, much more important. Now, multi-bagger is a stock which requires a lot of constant monitoring as well. Okay, what I mean by that is that if let's say the negative financial performance over here, and you start seeing positive financial performance, you'll have to also be very quick when it comes to your exit. Because you can see how volatile the stock is, it has corrected very significantly from there. Okay, let me take another example to explain you the multi-bagger approach. Let's look at Suryodaya Small Bank. Okay, it's a small cap stock, it's fallen very well from its high as well. Okay, it doesn't have a very good trend, so let's take LG Balakrishna for example. If you look at the returns for this particular stock, okay, so 1 year it's 14%, but 2 year it has given a 2x% return. Okay, 10-year period, 1000% return. But the thing with this stock is that you need some constant monitoring if you're trying to make it a multi-bagger. Okay, so for example, there was been a negative financial performance over here, but as the positive financial performance increased, the stock went up. Now you're at 20%, 20 financial trend score. The financial trend started dipping 9 to 1. Okay, you could have actually exited over here, but it still went up over here further. So there is constant monitoring required. With a multi-bagger approach, you can't just buy stocks and expect them to go up. But how to get a small and mid-cap multi-bagger stock? Simply head to the screeners. You can also invest in a Mojo stock, let's say a small and mid-cap. And what you've seen is that if a stock from a small or mid-cap or any segment remains in the Mojo list for a longer period, it ends up giving multi-fold returns as it goes forward. So you can either invest in the Mojo stock. If it exits, you can kind of take an exit as well if you'd like to, or else look into screeners and invest in those stocks.
The next question is from Mr. Ravi. Please elaborate on Markets Today tab and how to read it.
Sure. So let's go to Markets Today. If you just share my screen and just hide. Yeah, thanks a lot. So here if you see there is the Indian indices. Okay, so we have Sensex, Nifty. I'll actually go to the sectoral indices over here. So these are one very interesting charts to actually see at. If you want to see today's price movement across all different industries, you can just look at the red over here. Because if you see there has been most of a red movement in the particular market. Okay, so if you can see Nifty IT or Nifty Finance. Now one very interesting thing which I always look at. Okay, so for example, let's look at the 1 year, 1 month, or let's say a 1 year period, and let's look at the longer period. Okay, so in this way you can actually get the overall movement of a particular industry as well. Okay, let's look at this particular Nifty FMCG in the past 1 year. Now, if you look at 26% return, you might think the index has done very well. But please understand, within Nifty FMCG, you have to also look at the advances and declines. The index has moved up by 27%, but yet 6 stocks have actually declined. 8 stocks have advanced. Okay, so this is a very nice way to actually capture if there is a mirage in the market. And many a times you see BSE 500 or any particular index, flat or moving up. But here is one place where you can find out the advances and declines as well. Rest, there is basic commentary over here to kind of, if you just open you want to just see how the market is doing, you can actually look at this basic commentary over here. Okay, some of the top gainers across all indices, top losers across all indices over here. And this particular thing which we added over here is the result corner event. Okay, and even if you want to see the calendar events over here, if any company is declaring dividends, so on and so forth. Now you don't have to worry, if you add the stock in your portfolio, you can also see it in the portfolio section. And some of the news tabs over here to get an overview on what's happening with the market. But I think over here itself is where I end my scroll on this page. Because any index, okay, so BSE 100, which is the top 100 companies, okay, BSE 200 and BSE 500. So if you see here, BSE 500 is down by 20.21%, but the top 100 companies slightly down a bit more. So it gives you a very small idea here, I can't reach to a conclusion, that the larger companies have slightly underperformed when it's with its medium and smaller counterparts. Now, if you want to know whether mid-cap and small-cap what has performed today, you can simply click here. You can see small-cap is marginally up today. Okay, still there are more number of stocks which have declined. Okay, you can click on the mid-cap, you can see it's down by 0.40. So mid-caps are underperformed. Okay, lastly, you can look at Sensex is also underperformed over here. So today you can see small-cap has seen a lesser fall. So here you can understand the market cap movement. On the right, you can understand the sector movement. So I think the markets page gives you a wholesome view of the entire movement of the market here.
The next question is from Mr. Madhusudan. How do I know that I am not buying the stock at its peak value and still there's potential upside left?
If you just flash the question on the screen. So how do I know that I'm not buying the stock at its peak level and there's still upside potential left? So if you see the kind of stocks we are investing in today, okay, if you actually stumble upon any particular stock you're investing in, the company's price will keep going up as long as its earnings command that premium. What I mean by that is that you must have bought a stock at 52-week high. Have you ever bought a stock at a 52-week high and still seen 100% growth? I have seen it. Okay, if you buy a stock even at its peak, at its 52-week high, but the coming results, okay, the coming industry trend is still positive, that company can hit 52-week high every day and still move upwards. Now, at a hindsight, so I'm sitting here today and I've seen a particular stock, it's at its high, I can't actually make a comment on it because anything might follow with the market movement. Even though I might think that this company is doing extremely well, I can't actually predict the peak. That's the most difficult thing in the stock market. This is the peak, this is the bottom. This is the peak, this is the bottom. It's very difficult to actually predict the peak and the bottom in the stock market. Okay, if there is still upside potential left, look at the earnings. Okay, look at the industry movement. If it's a commodity stock, let's say it's a commodity stock of, let's say, steel or iron, look at the prices of steel and iron as well. So if there is still an upside potential left, yes, you have to see the earnings, the price movement, so on and so forth. Buying a stock at its peak value is something which I've never understood myself, ma'am. Or buying a stock at its lowest value is very difficult because the market is actually discounting for the news. As the news keeps coming in, the market is discounting the future. So it's very difficult to sit today and predict. And that's the reason you get returns in the stock market, is when you can predict whether this was the peak value or the bottom value.
The next question is from Mr. Nitin. How to compare sectors, the one which is outperforming currently?
What I do is I simply go to the result corner section. If you go to the result corner section over here, so two things you have to look when it comes to performance. One is, what is the company's earnings? How has the company performed well? So this is the result earnings. And lastly, in the market section, you can always get the price movement. So if I have to break down these two slides over here, what has the company done? How has the market reacted to it? This slide. So this is market movement, price movement. This is the earnings movement. Now, how to find out whether different industries have performed? You can simply go here and select the industry. So let's say FMCG, in December 2022 quarter, 40% of the stocks have done well. Okay, you can simply click on any of these industries and look at industry-wise specific. You can do your research from here. Okay, so for example, let's say December 2022. So the results have been coming in the past, let's say January period. Okay, so let's take for example private banks, 86% positive. Wow, public banks, 88% positive. So when I add both of them, if you see, 90% of the companies have actually declared positive results. Okay, they've done well. But how has the market reacted? Let's look at the year-to-date performance of Bank Nifty. It's down by 7%. You can see the disconnect over here. Even though there has been a 90% positive performance within companies in their earnings, the market has not reacted that well. And someone also asked me, how can you predict the peak and the low? You have to understand the market is discounting the future. Okay, the market might be looking at rising interest rates as a negative, a negative sign over here, because people might not be now approaching for loans. The company's loan book might be having a problem, so on and so forth. The market is looking forward. So even though the December quarterly results have been extremely good, here you can see the performance. It's not been that bad. Let's take another example for here. For example, let's look at IT stocks. BSE IT this year, how has it been doing? 6% up. But what has been the earnings performance of that sector? Let's compare it. Okay, so around 50% only companies have declared positive results. The rest are flat and negative. But you can see the performance in the index, it's I think 5, 7, 6%, which has done quite well as a sector. I think it's one of the best performing sectors this year for 2023. Okay, so that way you can actually compare sector on sector, see how the company is doing on its earnings, see how the market is rewarding that particular sector.
The next question is from Mr. Fernandez. In case of small cap stocks, FIIs, mutual funds and DIIs won't invest heavily. So how should I look at shareholding pattern?
It's very simple, sir. I think this is also a very wrong assumption, Mr. Fernandez. So if you just share my screen again. If a particular FI domestic institution invests in a small cap stock, that's a very green signal. Understand, small cap stocks, or let's say micro cap stocks, don't have a very high corporate governance standard. Okay, so the ones who have always see a high shareholding pattern with FIs. Let's break down your question a bit further. If you go to size, market cap, and let's talk about small and mid caps. So let's talk about only small cap stocks. So I'm limiting my market cap to 5,000 crores. And let's look at shareholding pattern. Let's look at FIs, DIs, or let's look at total institution as well. Let's run the analysis. And let's sort down by FIs. So if you know that 48% of QnA Industries market cap is by the FI holdings. Have you heard about these companies? I mean, I don't know if you have heard of many of them. If you want to find out which small cap companies are actually having high FI, DI holdings or overall institutional holdings, you can just simply add the screen now. Okay, let's look at QnA Industries. I don't know, I'm a bit inquisitive right now. Okay, so QnA Industries, if you look at the returns, okay, I think it's red all over. So even the FIs have a high proportion of investment, it's kind of red all over. So it's held by 53 foreign institutional investments. Not a very, very big number, but a good number. Okay, so I'm not really sure what they found in this company. The company has not been doing well. Let's look at Team Lee Services. I mean, this has a very high investment by foreign institutional investors. Okay, so held by 135 FIs. Okay, but I don't think the returns has been good. Yeah, you can see down by 35% since 1 year. Let's improve the screener. What you can do is, we've added two things over here. Let's also get return into consideration. Let's look at the past 1 year return. And now let's run the analysis. So here you can also see how the stocks have done in the past 1 year period. So this stock has done well. It has a high FI holding. This stock has done well, 17% up. These two stocks have not done that well. Look at Ujjivan Financial Services. We spoke about small companies with high FI holdings. Okay, so 3,080 crore small cap. It's a 72 buy in our system. The company has done very well. Past 1 year is up by 135%. Okay, so even though if FIs and mutual funds are not investing much in a particular small and mid cap, you can actually find out which ones they're investing in and what's their performance on MarketsMojo.
The next question is from Mr. Ajay. Can you suggest good incoming IPO this month?
So we do have an IPO section and our chief investment officer does an in-depth study on that. Okay, if you just share my screen. Here, if you can see the menu over here, we have an IPO section. The thing is that we don't look at very small SME IPOs. The last one was on 4th Jan, we look at the bigger companies. And here is where, we will let you know if there are upcoming IPOs and also which ones you should invest in. You can also find the performance of all the calls over here listed. So let's say we have asked to avoid most of the companies and I think the returns have also not been that great. Okay, we asked to subscribe 5-star business up by 14%. We asked to subscribe Unipaths, it's at the same price. But if you see the entire BSE IPO index, okay, let's say the past 1 year period. Okay, it's down by around 20%. So if you are looking at investing in IPO market, you can look at how the recent performance has been. You have to be very selective when it comes to picking companies. The overall index is not moving. I remember during COVID, this particular index was booming. So if you see, in COVID, people are just rushing to subscribe to companies. So let's say this period, March 2020, you can look at how well the index has moved smartly. And now we are going in a downward spiral. So if you're looking for IPOs, please understand it's a falling market for the IPO index. There is lesser participation by retail investors into IPO subscriptions. So when you're buying any particular IPO, please understand you have to be very selective.
The next question is from Mr. Rajiv. Let's take up Tata Motors for the stock research study.
Yeah, actually someone had to provide a particular option for the stock research study. So let's quickly do it. Okay. So this is my presentation over here, as you can see. Okay, I'm getting into edit mode. Yeah, is my presentation visible by any chance? Okay, it's not visible. So I'll be just making annotations over here. Yeah. So is my screen visible now? Okay, so I'm going to use the highlighter over here to make any particular marking over here, but I'll just use, let's say, a yellow, black marker. Okay, so he spoke about Tata Motors. Let's see if consistency is the key. Let's start off. Okay, so I'll be doing a bit quick. We are towards the end of the webinar, but I'm doing it a bit quick because I kind of do this study a lot. You might be doing it a bit slow, but that's fine. Is consistency the key? We'll simply look at the returns and we'll go to the quartile. Okay, you can see I don't have to even deep dive. Inconsistent performance across all. Okay, so yes, obviously it's not a consistent company when it comes to return performance. If you look at the financial trend, let's see the financial trend. And we all know about Tata Motors just turned positive. Recently, it was always declaring negative profits. No profits. It was always declaring losses. So if you ask me whether it's a consistent performance in terms of earnings or returns, it's both a quick no for this particular company. What is MarketsMojo's call? Okay, MarketsMojo's call is 37 at sell. If you break down the particular parameters, below average, fair, very positive, and mildly bearish. Okay, so here also it's a negative call. Now, what is the market's mood? As I said, the market might be looking at it differently. Let's look at the technical indicator over here. The market's mood. If you see, the company has turned mildly bearish from sideways. Okay, the company was seeing a sideways movement, but it's turning mildly bearish. And if you see here, one thing I remember I spoke about, if this side is completely red and this side starts turning green, then it might turn around with its price movement. Okay, let's look at volumes as well. We look at volumes when it comes to the market's mood. Okay, the delivery volumes are falling. Okay, so there's slightly lesser interest when it comes to buying these stocks over the last 1 month or 1 day period. Okay, that's a simple no. And look at the shareholding pattern as well. We spoke about high institutional presence. You see this company's institutional presence over here, 13, 14%, 20, 27, 32. So around 32% is institutional. Now I can't reach to a statement saying, okay, 32% institutional holding. Let's look at the peers instead. Side by side comparison. Okay, Tata Motors, look, it's okay, Maruti Suzuki. Maruti Suzuki I can see has a slightly higher institutional holding over here. You can see 21, 11, 5, 1. Okay, so even the foreign institutional investors or the DIIs are looking a bit more towards Maruti Suzuki. You can also go to any stock over here. So we have Mahindra & Mahindra. Even here, if you see, there is more holdings by FIs. Hindustan Motors. Okay, this company is having a very low institutional holding. So Tata Motors still doesn't have a good movement in the market. Technicals are bearish. Even the shareholding, there's not much interest. Earnings performance versus the sector. Let's simply go over here, and if you go to the top of the stocks page, okay, so a very small segment over here, we have 3 stocks with positive, okay, 1 stock which is flat, and no negative stocks. So the overall sector has seen a positive performance. Even Tata Motors is seeing a positive performance over here. Okay, so the earning performance for the sector is the one tick I can place here. Is it a strong player in the competition? Okay, so now let's go to the screener section and understand what's the market share of this particular company. Now to understand which industry to select, okay, I have to select auto and cars. So I'll go to industry and I will select Tata Motors industry, so which is auto and cars. And lastly, we're looking at dominance or the market share, the market cap, the net sales and the profits. Let's run the analysis. Okay, so if you see, I think there are only 3 players over here. I'll actually exclude this particular micro cap. So I'll just make one exclusion. In size, let's look at 1,000 crores and above. So I'm getting rid of Hindustan Motors over here. Oh, this is yeah, so now we only have 3 stocks. If you see the net sales of all the 3 companies, currently Tata Motors has the highest net sales. You have to also understand Tata Motors' presence globally. Okay, supplying a lot of cars across different, getting a very strong order book over here. So net sales are really high. Profit is at negative. It's a loss-making company over here. Only the last quarter was positive, but we're looking at trailing 12 months profit. So we're going 4 quarters back at an average. Okay, so your M&M is much better over here when it comes to profit share and even Maruti Suzuki. So here I can say it's a strong player in terms of sales, but not in terms of profit. It's still loss-making. Lastly, return performance versus the sector. So what are we going to look at? We're going to look at the sector's performance, the auto industry's performance. So I'll go to markets today. Let's look at Nifty Auto. So you're on the markets page. If you scroll on the right, you always get, yeah. So Nifty Auto, for example, the 1 year period, okay, the auto industry, 14% up. The top gainers, TVS Motor. Let's look at the year-to-date period. So in the year-to-date period, Tata Motors is the top performer over here. But to understand how the company has done over a longer period, you know what you can do is you can look at stocks within the index. So this is one button over here, there's another button over here to dive deeper. So I'm selecting Nifty Auto. You can look at, let's say, the 1 year period. So where is Tata Motors over here? You can actually kind of understand. Okay, so here Tata Motors has given 9% returns, minus negative percent returns. But here you can see other companies have done much better. TVS Motor, Tube Investments, for example, M&M. So still not a very good signal over here. Okay, I'm only getting like few tick marks, 2 tick marks. Lastly, now since I've analyzed the stock, since I looked at the entire industry, what is important is that is Tata Motors for you? Let's say you still want to invest, you believe in the turnaround of this company. You still want to invest in Tata Motors. Is the stock for you? Medium risk, low return. So you're taking medium amount of risk with 34% volatility, but negative return. So I mean, it doesn't make much sense if you want to invest in this particular company. It can be a turnaround player. That means, you know, you might invest in this particular company, but over the period of a few years, as the company starts declaring more positive quarters, that's the time, the company's ratings will change and it might do good. Now, if you invest today, there is more risk because you don't know if the company will go up or go down. But let's say Tata Motors turns positive and does well for the next 1 year. You might be a bit late when investing in this stock, but you're sure. You've seen consistency. You are sure that this company will perform. So you might invest later as well. The risk depends whether you're able to stomach it. Okay. So I think that's finishing off the report with this particular slide. And I think we're also done with the Q&A session. We've kind of picked up a lot of questions today as well. Tomorrow we'll be having an event for our Infinity investors at around 7 p.m. by our Chief Investment Officer, Mr. Sunil Damania. And on Saturday at around 7 p.m. I'll be talking about value versus growth strategy. It'll be a bit knowledgeable. We all talk about value versus growth stocks. I'll be breaking it down a bit further as to which strategy performs when, what are value versus growth stocks at MarketsMojo, in the Mojo stock section, and most importantly, how you can use your screener to actually segregate value versus growth stocks. Okay, so looking forward to seeing you all come for the events this week as well. Goodbye and have a great evening. Thank you so much.